We also have Akshay Bhagwat, Senior Vice President, Derivatives Research, JM Financial Services, joining us. Along with him, we also have Vinay Rajani, CMT, Senior Technical and Derivative Analyst of HDFC Securities, joining us. And Devin is back with us on the show. Good afternoon to all you gentlemen. Akshay, let's come to you first. Give us a sense of the trading setup that we've seen in today's session. Do you believe that this sell-off that we've seen today, a little bit of a profit booking coming into play, is setting a good support at least for tomorrow, and tomorrow's trade could look a little bit of a reverse, in a reverse momentum from where we've seen today? Are we spotting some green on the charts now, or do you believe that this sell-off that we're seeing is here to stay for at least a couple more trading sessions?
So first of all, good afternoon. Well, if you look at the broader market, it's been a one-way rally. And after such a one-way move, there is a good chance that markets may slip into a sideways consolidation or a time correction mode. And that is exactly probably where the markets are unfolding now. The prices are mostly hinting that we are getting into a range bound scenario. Now, if you were to define the broader end of this range, probably as it seems right now, 24,400 might be the lower end of the range, and 25,200 can be the upper end of the range. So yes, if you were to pinpoint exactly, there might be some support coming in the market for tomorrow's session. That level most probably looks around the levels of 24,450 to 500 zone, where a lot of put writing in the option space also are concentrated. So in all probability, that is the support where markets should kind of steady back again. For the next couple of days, expect a slight weakness in the broader market breadth, considering that the sell-off the trigger for the sell-off has started today.
Right. So that's the take coming in on overall benchmark indices. Vinay, what's your view on the broader markets? Because everyone was touting the fact that the recovery would be sharper in that particular area. Today they've caved in. Do you think it's just a bout of profit booking that we are actually witnessing when you talk about the broader markets, and more sort of strength is in store after this sort of a pause?
Yeah, good afternoon. So yes, definitely it is a concern. Today, mid-cap index has fallen by 1.6%, and the way it is shaping up, yesterday we saw a doji candlestick pattern on the daily chart, and today the profit booking is there. So it confirms the short-term reversal. So positionally it is not bearish, but short-term, yes, we can expect some more correction in the mid-cap and small caps going by the technical setup. So yes, couple of session could be there. Further extension of the profit booking could be there, though the positional trend will remain strong, but at least we can expect a couple of percentage further extension of the fall in the mid cap and small caps. Nifty is not looking that much weak as compared to mid cap and small cap. So yes, broader markets are a bit concern, and one should wait for proper level. I think couple of percentage fall should be there, and after that one can think of considering the long position in the broader market. But as of now, the way it is closing, it is definitely a weak sign, and we can expect some more correction in the next couple of sessions.
So more correction overall, but broader market looking slightly more cautious than the benchmarks. That's the word coming in from Vinay. But Devin, we'll come to you, and while we're talking about benchmarks, I want to talk about Hindalco and its earnings that we've seen compared to what the street was estimating. Except profit, it's a beat coming in on revenue, EBITDA margins, but the stock is not showing any positive momentum at all. But given it's still 0.2% higher amid a market like this, it's still holding on to the green, but not much happening, and it's not been able to lift the Nifty also from the day's highest point. What are you making of these numbers, given that Novelis was largely in line, and these numbers also seem to be very, very good at the first cut?
Yes, indeed. I think the quarterly numbers, nothing against. Maybe I think the market was anticipating it. Probably, I think after the Novelis result, I think this anticipation was, I think, quite high. Maybe I think in the current financial year, a couple of things could possibly work in favor of, in general, for most of the metal commodity companies. On one side, I think the cost of input, including the energy costs, would probably remain slightly lower. So that is a good sign for profit margin. On the other side, the demand scenario along with the price outlook is improving. And as a result of it, both ferrous and non-ferrous metals are likely to show relatively better amount of pricing trend. Given the kind of situation in which I think most of our companies are operating today, on one side, they have the opportunity to make better profits given the kind of lower input intake costs, including of energy and including of, I think, the mines where probably I think some of these companies are operating, including coal at the same time. And on the other side, I think the situation on the demand front is definitely improving. So certainly we believe that the forward price trajectory, along with the higher volume growth, could possibly be a good formula for many of the metal commodity companies to perform better. Not completely sure immediately at this point of time to talk about Hindalco, but on the face of it, the numbers are looking relatively okay and should be progressing further in the subsequent quarters as I see it.
Right, so that's the take coming in on Hindalco. Devin, I wanted to get your view when you talk about this entire space, when you talk about infrastructure, right? Today you have this commentary coming in from GQG's Rajiv Jain, who's saying that they are very, very underweight on China. They are looking and they have been buyers in the Indian markets. Apart from that, they said that they like the infra investment theme in India. When you talk about infra theme, that theme is very large because we don't also take into consideration that there are other segments when you talk about infra development, like you have water as well as telecom. That also comes under the infra development when you talk about India, isn't it? Correct me if I'm wrong though. So what's your take when you talk about infra? Is this the holistic approach that you must take?
Well, yes, I think a complete approach I think has to be cultivated, be it in the power and power ancillary related businesses, or be it in the area of the infrastructure per se in the logistic related businesses, wherein I think you include the road, railways, waterways, and airways. And at the same time, I think the newer segments like renewable segment of energy, and at the same time data center. So all in all put together, yes, I think we do believe that it should be an inclusive play going forward. India has been spending large amount of money. I think this year the budget for spending on infrastructure is about 11 lakh crore plus. And as we see it, I think given the kind of strength of revenue generation in the country, we believe that I think we should be progressively increasing spending budget by about 10% every successive year till 2030. So given that kind of a situation, we believe that some of the infra companies would relatively have better times. Companies which have already completed their projects and generating free cash flows are in a better position to create organic as well as inorganic growth. And that's where I think one will have to keep an eye within this entire basket. We believe that I think this is an opportunity for some case wherein those long-term investors who are basically putting the larger amount of money, I think from the insurance companies or from sovereign funds, etc. I think they could be really looking at some of the large infrastructure companies which are operating in the country today.
Okay, Devin, appreciate that view on the infra space. Thanks so much for joining us. On that note, we'll let you go. But time now to get our closing trades from our technical experts who have joined us on the show. Akshay, we'll come to you first. What's looking good for tomorrow and what's your closing trade for the day?
Well, see, today the markets are in the red, but I believe there are some broader setups in stocks which do give you a promising opportunity at the lower end on dips as it presents today. So stocks to keep on your radar on the buy watch list would be Larsen and Toubro. You can buy it at the current market price. Overall, the broader technical setup is very positive, a very strong reaction on the upside we have seen in the last few days. So I'm overall looking at targets of 3750 to 3778. We'll maintain 3497 as a stop loss on this trade. Second recommendation is in DLF, whose results, the reaction post results has been tremendous, especially in the opening hour of trade. But with the market breadth weakening during the day, there has been some profit booking noted in DLF. But eventually, I believe there will be buyers will be lined up at dips, which should pull the stock up again to the levels of 795. So that is the target area one should be working with on the buy trade in DLF. And 722 will be the stop loss on this buying recommendation.
Okay, so that's Akshay's closing trades. What about you, Vinay? What's looking good for tomorrow and how would you position your trades for tomorrow?
Yeah, so going by the chart, I feel that one can go short in some of the derivative stocks which are looking weak on the chart. So one of the stock which I feel should go down is the REC. So REC is looking weak and it has recently taken a resistance at its 50 days exponential moving average and started coming down. So relatively underperformance is there and it is trading below its 50 and 200 days average. So considering the primary trend, I feel that in this kind of scenario, one can go short in the REC. So this can be captured through futures. So REC May future can be shorted at 396, 397. Stop loss I would suggest at 403. On the downside, I'm expecting a target of 388. The second pick also I would like to go short because we are taking a bet on tomorrow's call. So Torrent Power is looking weak. So for last 6-7 trading sessions, the Torrent Power has been finding resistance at its 200 days EMA. And relatively, this chart setup is weak because in the rising market also this stock did not perform. And in such a scenario where underperformer stock is there, we should take this opportunity to go short here. So Torrent Power May future can be shorted around 1400, 1395 to 1400 should be the selling range in the May future. I am suggesting a stop loss at 1430. And on the downside, we can expect a target of 1360. So Torrent Power and REC May future one can go short with the mentioned stop losses.
Right, so those are some of the ideas coming in from our experts, but let's talk about an exclusive story that we have for you. And we understand from our sources that the National Securities Depository Limited, or NSDL as we all know it, has reduced its IPO size according to the addendum to its draft papers. Banks such as IDBI Bank, HDFC Bank, SBI and Union Bank are all set to pare the stake. Let's go across to Ankur, who has more details on that. Ankur, what are you picking up with regards to NSDL's IPO and what's the latest?
Yes, NSDL IPO is expected soon as per sources because the company has now filed addendum to DRHP. The size which was earlier 3,500 crore for the IPO is now pegged at around rupees 3,000 crore, and also the addendum includes updated financials and revised disclosures in the IPO. If you talk about the cut in size, it has primarily come from Union Bank, which is now going to offload only 5 million shares. Earlier this size was 5 million shares and now it has been cut to 0.5 million shares. So there the reduction is coming from. Apart from that, if you talk about the overall size that has been cut around 12%, that is what the estimate is. NSDL is going to trim the offer size, if you talk in terms of shares, to 50 million shares versus 57 million planned earlier. Now, who is going to offload the stake? NSE is going to offload 18 million shares or 9% stake in NSDL IPO. Similarly, I already told about Union Bank, but HDFC Bank, SBI, Suti is also going to pair the stake in IPO. Remember earlier, the company had got approval from SEBI regarding the extension of IPO timeline after there were few questions, so there was a delay, and now we understand that IPO is going to hit the market very soon.
Okay, Ankur, thanks for all of those exclusive details coming in on the upcoming NSDL IPO, and sources say that's going to be hitting these streets soon. But on that note, we'll slip into a very short break on this edition of Closing Trades. On the other side, we'll keep chatting with our technical experts, and Sudeep Bandyopadhyay will also be joining us.